Okay, let's dive right into this explainer covering day 14 of the Trades by Sci ICC course on market structure. Have you ever found yourself just staring at a chart, completely overwhelmed by all the noise, and wondering which direction price is actually heading? Well, you're definitely not alone, and you are in exactly the right place. Today, we're breaking down the absolute fundamentals of how to correctly mark up your charts, and most importantly, respect the true market structure. Here is our quick whiteboard syllabus for today. We're going to cover Welcome to ICCMAFIA, finding your swing points, higher time frame respected, time frame alignment rules, market momentum and traffic, and finally, the psychology of positioning. Let's get to it. Starting right off with Section 1. Welcome to ICCMAFIA. Just a quick heads up before we jump into the charts. Make sure to grab your free infographic and trading journal at that GitHub link. And of course, massive credit to Trades by Sci for these original concepts. The whole goal here is just spreading solid knowledge, weeding out the fake gurus, and building an incredibly strong, disciplined community.
Okay, moving right into Section 2, finding your swing points.
Now, this is absolutely crucial. To see the real market structure, we have to clear out the chaos. By stripping away all those messy indicators and literally only looking at the last 1 to 3 days or sessions, the picture becomes so much clearer. As Sai explains, you really don't need a million levels marked up on the daily, the 4-hour, and the 1-hour. That just makes your chart look like an unreadable mess. Just turn off the indicators, focus on recent action, and visually pinpoint those recent swing highs and swing lows. It is really that simple. And remember, a swing high or low isn't about memorizing some complex candle pattern. It's just that undeniable, obvious visual point where price basically hit a brick wall and reversed. It's the specific peak or valley where price drastically changed direction. Why does that happen? Because strong buyers or strong sellers were sitting exactly at that level waiting to pounce. You literally just need to trust your own eyes to spot these drastic shifts. Which perfectly sets up Section 3, Higher Timeframe Respected. If you're ever getting faked out by lower time frame noise, and we all have been, just remember that the 4-hour chart's structure will consistently overpower the 1-hour chart's temporary fluctuations. You might look at a 1-hour chart and panic, thinking you're seeing a complete trend reversal. But if you zoom out, that 4-hour chart might just be showing a totally normal, healthy pullback within a massive trend. The macro strength is what's truly driving the vehicle here. So the takeaway is exactly what Sai says right here. The higher time frame is the ultimate authority. The 4-hour is always going to be stronger than the 1-hour. The 1-hour is always stronger than the 30-minute. Whenever you've got conflicting signals, which happens all the time, you always defer to the higher time frame. Think about it. It requires significantly more money and volume to create those larger structures, so you have to respect them. Let's step right into Section 4, Time Frame Alignment Rules. To actually enter a trade safely, you have to systematically step down through the timeframes. Step 1, figure out the 4-hour overarching trend. Once you know that, Step 2 is patiently waiting for the 1-hour to actually start building structure in that exact same direction. Only then do you hit Step 3, dropping down to the 15-minute to verify perfect alignment for your execution. It is a strict, non-negotiable process. And this just hammers home the discipline you need. The 15-minute bias must directly match the 1-hour and 4-hour structure, period. If the 1-hour is telling you to buy, then that 15-minute chart better be building bullish structure, making higher highs and higher lows right alongside it. If they're fighting each other, you don't have a clear setup. Just sit on your hands. Moving into Section 5, Market Momentum and Traffic. So once you have that beautiful time frame alignment, how does price actually move? Well, momentum is literally like a Lamborghini speeding down an empty highway. When buyers break past a resistance point and there are no historical sellers blocking the way, they just punch the gas. There's nothing to stop the market, so it accelerates incredibly fast. The only thing that's going to cause price to stall or reverse is when it finally runs into traffic, the next established zone of sellers. If buyers are rushing in with full strength like that speeding Lamborghini, the sellers, the slow Nancys of the market, just have to get the heck out of the way until those buyers eventually run out of gas. You absolutely cannot stand in front of massive, aligned, higher time frame momentum. You either hop in the Lamborghini for the ride or you stay off the highway completely. Finally, let's tie this all together with Section 6, the psychology of positioning. You've really got to be honest with yourself here. Are you genuinely waiting to position yourself for a high probability setup based on market structure, or are you just desperately forcing a trade because of FOMO? As a beginner, it is so tempting to just click buttons and feel like you're in the game. But the true professional waits. They wait to put themselves in a high leverage position where the time frames are perfectly aligned and the structure is crystal clear. And hey, Missing a trade to get that extra confirmation on the higher time frame? That's actually a superpower, not a failure. Like Sai says, it is totally okay to miss one trade. You can catch the rest if the higher time frame is actually building a real trend. The market isn't going anywhere. If a true trend is forming, it'll keep making higher highs and higher lows. You don't have to catch the very first microscopic move. Following these strict time frame rules is going to break down those old greedy habits and build an entirely new, disciplined mindset. Sai talks a lot about how trading eliminated his greed, his revenge trading, and his false hope. Following a system forces you to rely on logical rules, like waiting for that 15-minute to align with a 4-hour instead of acting on impulsive emotion. It truly, fundamentally builds you into a more disciplined person.
So, I'll leave you with this provocative thought as you pull up your charts today. Will you respect the higher time frame, or are you going to let the noise of the lower time frames completely crush your position? Do yourself a favor. Clean up your charts, spot your swing points, get those time frames aligned, and wait for that Lamborghini to hit the open highway. Thanks so much for joining me on this explainer, and keep learning.